Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2024 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we have built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors while leading a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where you can bring value to multiple constituents. To learn more about Lytham Partners and the investor relation programs we can provide, please access our website at www.lythampartners.com. For this panel discussion that's titled Investing in a Higher Interest Rate Environment, Ins and Outs of the Micro and Small Cap Marketplace, we welcome Yale Bock of YH&C Investments and Randy Watsek of Raymond James. Yale is the owner and operator of YH&C Investments, a registered investment advisor, Nevada and California licensed, located in Las Vegas, Nevada. And Yale has started investing as a private investor straight out of college. Randy has managed money for over 25 years and currently operates an investment advisory practice with Raymond James. His client investments following a strategy that seeks value in strong, well-established companies with growing cash flows and profitability. Hi, Yale and Randy, and welcome to the discussion.
Hi.
Good morning, Adam.
Good morning. So let's maybe kick things off here. Can you expand a little bit about yourself and your background? Maybe Yale, we'll start with you.
Yeah, so I started investing straight out of college. This is back in 1991, so we're talking a long time ago. And had a friend in graduate school who said, you ever start your own practice? We're in. So I did in 04, the CFA in 07. Really, over the last, I would say, 8 years, looked into and have invested in microcaps. That's where the most inefficient part of the market is. Randy's background, where he talked about buying companies with strong cash flows, free cash flows, competitive advantages. That's quite appealing, and it's really important when you deal with the microcap area. So looking forward to the discussion and interested to hear what other people have to say.
Randy?
Sure. So I started a little bit later, which was more like the late 90s, which was after I graduated from college, and I was in the middle of taking the CFA exams. And I was sort of immediately attracted to microcap. And in fact, that was the first stock that I bought, was a microcap stock. And this was in the midst of the dot-com boom, when all the flashy tech companies were around. But I was still attracted even back then to the small companies that are cash flow positive and look cheap from a valuation perspective. And I sort of did that on my own while working in commercial lending for a few years. Then I went to business school in 2000. And during that time, I had my first professional experience with microcap stocks. I had an internship with a very small microcap value fund in Chicago, and did that for basically part-time while I was a business school student. And I really loved that. I got a strong flavor for microcaps at that time. I love that even as with a small hedge fund, I think they had 30 million in assets at the time. You could call up the company and the CFO and CEO would meet with you, and that's totally different than the large cap space. So that was very interesting to me. The other thing I found was there's thousands of small and micro cap stocks, and the average quality, as sort of Yale was alluding to, is not that high. So it's really important to focus on the cash flows and the competitive position and what opportunities that they have. And because the average quality is not that high, and there's so many that are not known, that does give you an opportunity when you're able to identify the ones that have good opportunities and that have strong cash flows. And so that was very attractive to me. After business school in 2002, I worked for an institutional money manager that actually had a pretty large microcap fund as well as a small cap strategy, and did that basically for most of the last 20 25 years, until I decided to branch out into running my own investment advisory practice at Raymond James.
Great, thank you. So the Fed has raised interest rates in a very aggressive manner in the past couple of years. And as a result, the market has gone from a risk on to a risk off investing environment, with going from there is no alternative to there is, or there are alternatives. How does an investor in micro and small cap companies digest those rapid changes in this market? Randy, maybe we'll start with you.
Sure. It's interesting because when I was starting in the late 90s and early 2000s, the interest rates weren't all that different than what they are right now, actually. So it's kind of it's a different economic environment, but the interest rate environment is kind of similar. But the overall effect on risk on versus risk off, when the government does print a lot of money and make interest rates artificially low, it does tend to favor companies that are not cash flow positive, that are even negative earnings, because the current earnings are not valued as much as future earnings. And so that's what we saw a lot in the last 10 years, where there was a favor to a lot of startup companies, biotech companies, emerging technology companies, that sort of thing. Once you're in the higher interest rate environment, then the current value of earnings matters a lot more. And so you've seen maybe a multi-year bear market in the companies that are kind of on the edge of profitability or below profitability. But in terms of the microcap space, I want to say that interest rates themselves have a huge impact. It does have an impact, but I think that it ultimately in equity investing, it depends a lot more on the quality of the company, what kind of niche they have, how strong is their balance sheet. So if it's a highly levered microcap company, higher interest rates is very bad for them. It's a company that doesn't have much debt or any debt at all, or maybe even a positive cash balance on their balance sheet, then it's not necessarily bad for them. But the one caveat I would say is that during a major recession, especially a credit-driven recession like the great financial crisis, then microcap stocks are substantially more vulnerable than larger companies of equivalent balance sheet strength.
Yale, how does an investor in micro and small cap companies digest these rapid interest rate increases in the market?
Thanks for the question. I think that an investor has to look at each specific situation and especially focus on the liquidity profile of the specific entity. There are situations where companies can have cash balances and be burning through cash, and if it's in retail, the suppliers can cut them off. There's all kinds of different scenarios with specific businesses where it's not so much the economic environment, but more the specific liquidity circumstances that are really important. So getting into the details of the balance sheet and the specific business is really critical, along with what kind of relationships the business may have with its creditors and the banking institutions that they're working with. And the other thing I would say is it's really important to identify the changes that are taking place in the business. In many cases, there's not, and I shouldn't say many cases, in almost all cases, businesses are changing. They're trying to improve. Whether that's working or not, that's the question. And that's where the analysis of what's happening with the business becomes critical. And the microcap area is full of all kinds of situations where financings are taking place, and you have to really get into those financings to determine, is this really in the best interest of the business, and how does it affect liquidity? So I think those are really, really important issues for investors to think about, especially in an environment where it's pretty well agreed upon that a higher interest rate environment affects microcaps disproportionately because many of them don't have access to financing. And with higher interest rates, you have higher interest burdens. So those are things that really have to be paid attention to. That's how I look at it.
That leads right into my next question. I appreciate that, Yale. Given the rise in interest rates and their effects, many microcap and small caps haven't really, kept up with other certain sectors of the market. And this has been going on actually for a couple of years now. So, in your opinion, how long will this cycle last? We're in like a microcap, small cap winter right now. Should investors, be looking at a specific sector, or sorry, should the investors be looking at the sector, microcap and small cap, right now, and if so, why?
Is this for me?
It's for you, Yale. Go ahead.
Okay, I would argue, and it's another pretty well documented. If you look at facts, there's never been a bigger discrepancy between what you're going to pay at higher quality companies versus small cap and micro cap. You could even argue mid caps. So you're going to get more for your money. The question is, what exactly are you paying for? As far as the length of time that micro caps have been suppressed in terms of valuation versus mega caps and the broader market, that has historically over time dissipated. Reversion to the mean is one of the time tested laws of finance. So you get into the question is, how much staying power does an investor have, and what specific kinds of companies or what specific areas do you want to focus on? I would suggest you probably want to have some combination of offense and defense, meaning defense are things that you can go to the bank in terms of knowing that they're going to be around. So you might think about things countercyclically. If a company is going to do better during a more difficult economic time, that's something that we're playing defense with, versus something that's more tied to the economic cycle. When things improve, that would be something that you're going to be playing offense with. So if you have a combination thereof of offense and defense, weighted towards your investment style and objective, now you kind of have all your bases covered, or you should. And all this should be consistent with what you're trying to accomplish, and that's where you get into planning and who you're working with, etc.
Randy, should investors be looking at the microcap, small cap space now, and if so, why?
I think whether they should be looking at it sort of depends on the individual and their risk profile and things like that. I want to make a blanket statement that investors as a whole should be looking or shouldn't be looking. What I will say is I totally agree with Yale that the valuation spread between what you get for how much earnings you get for your dollar in a microcap stock versus a mega cap stock is quite wide right now. So from a pure valuation standpoint, if you're a more aggressive profit-seeking investor, I do think that's a place to look. Of course, understanding the risk profile. That said, I don't think that a lot of I don't think interest rates and that sort of thing has had a major influence on that dynamic. It has had an influence, but I think a lot of it has been the increasing winner-take-all effect, and especially the technology industry, and that sort of has led the mega cap stocks to have their own performance drivers, which has led them to become a huge percentage of the market right now. It's I think I read the top 10 stocks are like 34% of the S&P 500 now. So it's really been a winner-take-all sort of thing for those companies. That said, there's as Yale was mentioning, there's always been a tendency for reversion to the mean from a variety of perspectives. One, the valuation has now gotten extremely expensive in large cap stocks. Then you start getting regulatory pressures and new competitive pressures and things like that. So it's hard for that process to continue forever. I would be very surprised if it keeps on going in that direction, and more likely I would think that it would revert. And then just from the individual stock investors' perspective, there's just so many opportunities when you look at all the thousands of stocks out there. And a lot of these stocks are not covered at all, but by analysts, by sell-side analysts anyway. And so that gives you an opportunity to find things that might have a big discrepancy with their value. So I still find it a fruitful space to look at.
So along those lines, we'll go to Randy first here. What are some of the tricks of the trade, so to speak, that you use to navigate the micro and small cap marketplace? For example, are there any themes or particular industry verticals that you focus on? And if so, which ones and why?
In terms of themes, I would say my theme is not so much industry specific as characteristics that I'm looking for. And those characteristics are strong and consistent free cash flow generation, a balance sheet that is not too levered or too sensitive to liquidity types of events that Yale was alluding to earlier, more resilient types of businesses, maybe that have a niche. No company in the microcap space is going to dominate a wide market just because of their size, but they might very well be strong in a particular niche. And so that's what I'm looking for. In terms of verticals, it's more a case of what I don't do than what I do. If it's an industry that I just can't understand, then I just stay away from it. So if it's like, for example, there's a lot of microcap biotech stocks, and there might be a lot of opportunity there, but I don't know a thing about biotech, so I'm not going to look at any of those. But if it's a traditional business that produces cash flow that I could analyze in a normal way without specialty expertise in that industry, then that's something that I would look for.
Yale, what about yourself? Are there any tricks of the trade that you use to navigate the microcap and small cap marketplace? And are there any themes or verticals that you use, and if so, why?
Sure. Thanks for the question. First, I would say you really have to concentrate on management, because you're in the microcap area. You're really tying your capital to these leaders of these businesses. Second, I would also say, I try to establish quantitative metrics for businesses and thresholds that weed out a lot of historically problem areas. So if a business doesn't have a top line of revenues, meaning of $50 million, okay, usually problems can arise in those kinds of areas, because a lot of those companies, they're trying to raise money. So you can set up thresholds where you say, well, I'm not going to even think about things that are below that. And then if you tie things like, are they cash flow positive? What does their competitive landscape look like? And you can just keep adding all kinds of things, so you can winnow down what exactly it is that you're looking at. Personally, anything, as Randy mentioned, anything biotech related, anything that historically has been a very poor area to invest in. So mining, cars, autos, what's it called? Marijuana stuff, cryptocurrency, Bitcoin mining, all those things that are, let's just say, very questionable in terms of resilience and permanence. Those are things that I want to avoid. What do I want? I want somebody who's in management who has a long track record of actually performing well for investors, where they've created shareholder value. So start with a 5 and 10 year track record, go through their history. If there's any kinds of off balance sheet transactions or history of self-dealing, or they were involved in anything that's untoward that you don't think smells right, just weed them out. Because in microcap, and it's not just microcap, and in even the broader market, it's like 2 to 5% of all the companies actually produce alpha. So you're talking about a very, very small amount of companies that actually are creating the value for most investors. So you take it even further for on the microcap area, they really have to be a high quality company that you look at the business and go, oh my, I have to have a piece of this. And then you have to actually do the work to say, is this something that I really thoroughly understand and have faith that these people are going to be good stewards of capital? So that's how I look at it.
I would just add one more thing. Warren Buffett has said several times that talking about the microcap space, if you're going to do it, you just have to read through thousands of companies, and you'll occasionally find the ones that hit all the buttons. And like Yale was saying, it's a tiny percentage that really have the great opportunity, and it does require doing the work and going through a lot of different companies.
Great, thank you, Randy. Thank you, Yale. Almost complete here. When it comes to micro cap and small cap investing, what are you now broadly seeing out there, right now? What is your opinion in what is working, what is not working? I mean, we discussed this a little bit, but any additional thoughts on that, Randy?
In terms of what's working or not working, I don't see a broad theme in the micro cap space. I see it in like the larger industry types of things, anything related to AI or tech related, that's working. But in terms of relevance to microcap, I would say it's more one-off, and it's very interesting because I was listening to what Yale was saying, and that's basically what's working in microcap. In other words, you find a company that you think I got to be part of this. There's probably a larger company that's looking at them at some point and thinking the same thing. What works is when one of the microcap stocks gets bought out by a larger company, because that larger company sees the attractive investment characteristics that you see in it. But in terms of themes and things like that, I don't know if I'd find any broad like industry or technology things or whatever in the microcap space.
Yale, are you seeing, what are you seeing out there right now? What's your opinion on what's working, what's not working?
Generally speaking, the same things that work in higher market cap areas will work in microcap and small caps. And investors are more income statement oriented, meaning they're looking for growth. So if you look at it, the reason why the broader market is attracted to NVIDIA or Amazon or Microsoft is because their top line growths have been fabulous and their margin profiles are quite good. You can just extend that to the microcap area. People see, if the investment community sees that the top line is growing 20, 30, 40, 50%, and the margin profile is improving, people get interested. Now the question becomes, how long is that going to last for? And is this something that's sustainable? And also, the other piece that I would say is you have to focus on the capital structures, because in some cases, a company can do really, really well, but if the capital structure is poor, it's going to be very hard for the equity to perform. So part of the analysis is investigating the balance sheet and looking at the capital structure. So as a piece of information, what you see a lot of times with the microcaps is you got these capital structures where there's 100, 200, 300 million shares outstanding in the business at 5 million, 10 million, 15 million, 20 million. The equity has very, very little chance to perform unless they can change the capital structure in some way to make it more aligned with the size of the business. What you really want is something in reverse. You want a very low number of shares outstanding. Think Berkshire Hathaway, even to this day, still has like 1.5 million, right? But you want a bigger business. moving towards 100 million, 200 million, 300 million revenue with a nice cash flow profile. And if the margins are improving and the top line is growing quite nicely, now you have something that people are going to get interested in, because you've got limited supply in terms of a float, and you've got a business that's growing. So that's what I would say has a much better chance of working. When it works, that's a whole nother issue, and who's going to get interested is another issue. And that's where guys like Adam create interest in the investment community. So that's how I would characterize it.
Great, thank you. So to conclude, anything else you want to add before we conclude the discussion? I'll start with Randy.
Sure. A lot of people are looking for what are the secrets of investing and things like that, but it's really a case where just fundamental blocking and tackling is the most important key to success. Understanding the capital structure, the cash flow structure, what are the growth opportunities, the management quality, what's the niche position in the market. Basically, you want to think, is this a business that I would buy 100% of? Like, would I like to own this business? And in a microcap space, you get to do that with just buying a small percentage of it and owning several or 20 or whatever businesses that are good quality, rather than just having it all in one. But you want to have the same mindset as someone who's just buying a single business. And if you have that mindset and you look through the companies, there are thousands of companies out there, and there are, even if 1 or 2 or whatever percentage are the really good ones, you can find them by just sifting through all those companies.
Yale, any concluding remarks?
Yeah, I would say the market cap area is a really interesting area, because there's thousands of companies out there that are trying to navigate the world and improve their business and grow their business. And if you're interested in investing and interested in business, this is an area that you can wade into and look at all kinds of different companies. You have to be willing to put in the work, and you have to realize that there's probably going to be a little growing period, because not everything's going to work. What looks like a great plan and it sounds great, but 6 months or a year down the line, something's changed, and you're going to go through some challenging periods, let's call it. So you have to be prepared for that. But intellectually, like if you like to learn about all kinds of businesses, the microcap area is really quite fascinating, and it's a fun area to participate in. Can be, anyway.
Well put. Well, thank you, Yale and Randy, for today's discussion. We greatly appreciate your time. We hope everyone enjoys the conference. Thank you.
Thank you.
Thanks, Adam. We appreciate it.